You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody. We're doing today shock patterns. What are shock patterns? Exactly what you think they'd be, right? Or not. I think the unexpected. It's like the charts are saying this is supposed to happen. If you know how to read the charts, of course, and the patterns, basic patterns, nothing that esoteric, special, pullback patterns, rounding bottoms, head and shoulders, tops, bottoms, whatever is a general pattern that's spoken about on a day-to-day basis amongst those that talk about technical analysis. They suggest prices are going to move up or down or possibly sideways. And sometimes they do the totally unexpected. And when they do that, it's a great setup. And it does happen to varying degrees, which we'll talk about and look at certain examples. But these shocks that occur, the great thing about them is that kind of like, especially in this market, so many more wiggles and more erratic price patterns. But the shock eliminates that because it has a great extent to eliminate the uncertainty that's going on in that moment. And by doing that, it takes away to a great degree the potential for us to be shaken out of a trade because some type of shock has already happened. So let's look at some basic patterns. Let's look at these shock patterns, and maybe we'll talk a little bit about bar by bar analysis and how to put that all together. And you can start using that in your trading plan this afternoon.
Awesome. Good afternoon.
Good afternoon, Daniel.
Yeah, this is Fed Day today. So yeah, I think we might be able to apply today's subject even more so. This is our slide we start with every time. Why? Because it's our approach to trading anything that moves on any time frame. We are technical based traders. Everything starts with a compelling pattern. Today's session, of course, is going to incorporate that particular shock pattern. And it's also going to be incorporated because just because you have a shock doesn't mean it's a tradable setup. But it's also included in relative strength and what we call bar by bar analysis, red and green bars ignored. You'll get the idea with many examples as always. And then we take that picture, apply our other concepts, which happens instantaneous once you understand the method. And where is that picture in the trend, support or resistance? What are multiple time frames saying? What are the broader markets doing? And then we just enter and manage in between. So are any of these shock patterns? These are all just very simple red and green candlesticks. Every one of these is bullish. And then we take that bullish pattern and then we overlay these other concepts. But if you think about it, every single one of these does have a different level of shock. Now, I don't want to get off track here, but there's different levels of shock in these. For example, this is what we call a master trader buy setup, which is a retracement and reversal on support and an uptrend. So we're expecting this. So I don't call this a shock per se, but in essence, it's a small shock. Why? Because I have 3 red bars followed by a reversal bar. So there's a little shock there, but that one's expected. We're going to focus a lot today on the unexpected shock patterns that not only set up new opportunity, but also, Greg, you had a title one day called something like how to know when you're wrong. So, we use bar by bar analysis and these same concepts to say, uh-oh, I shouldn't have done that. I need to go into defense mode now. But we're going to primarily be focusing on the offensive side of setting up new opportunity, which are going to come. You'll see all these different flavors right now as we move forward. So Greg defined it in the intro there. I keep it simple here. What's a shock pattern? What are you guys talking about today? It's a compelling pattern created by a shock, or as Greg said, the unexpected. They're different flavors. We can have igniting gaps, gap reversals, igniting bars, failed breakouts and breakdowns creates a shock. MNWs are technically a shock because this is in a downtrend and the bears are expecting lower prices, and this right edge sets up the unexpected. We'll show you that the various green or red bars, the message of them highly suggests something's going to happen, and then we're shocked the very next bar. Greg likes to use this term, the event. What we're looking for there is it's jumping out at you. There's an event, a bar or pattern of bars that are giving us a new message that was not suggested before those bars.
It jumps out at you. Doesn't require any extra thought about what happened there. It's like, oh my gosh, look at that. That's an event.
Right. And so that leads into this note. Okay, I have an event. What do I do with it, Greg and Dan? Well, we're going to teach you today. And it goes back to that prior slide. The tradable event is this. Give me a pattern, apply those other concepts. Just because I have a failed pattern doesn't mean it's a new opportunity. It could just be, pattern didn't work for whatever reason. And so this is what we're going to jump into right now with plenty of examples. This is one we traded just a week or so ago. So let's start here. This is a bearish 1, 2, 3 continuation breakdown with a price void, which is actually over here. But I'm going to point out these shocks. The expectation of this bullish 1, 2, 3 continuation, even though it didn't trigger, the entry of this pattern is over the high of these two bars. It didn't trigger, so no harm. 100% retracement back to the breakout. Now, so Greg, I've learned this from you over the years too. And you use that term, the tell, from playing poker. It's like, I got you. And we'll be highlighting those today. So at the high of this bar, it was a big fat green bar. And it closed with a topping tail. Is that a got you where I want to short it? Absolutely not. I need more information. But the information I have now is a beautiful wide range igniting breakout failed. Topping tail attempted breakout failed. Now I have 1, 2, 3, 4, 5 more bars that could not bounce. Now I have a closing breakdown. Yeah.
So what Dan is explaining is multiple events that are coming together. So while one candlestick provides a message like this wide range bar right here, and think about what you would be thinking at that time based on this chart. And I would think most of us would agree that after seeing this type of price action that preceded it, and then a big bar like that, which was accompanied by, some pretty good volume, it suggested prices would go up. and then it didn't. And then on the second attempt to go up, it couldn't go up. This is how we put together various events and other concepts from that first slide we looked at to form a strategy and make trading decisions.
And you know, we are talking about this because that's today's session, but actually the trade that we gave our subscribers was right here as a bearish 1, 2, 3 continuation. Here's another shock, Greg, that I don't have circled. Why is this a shock? Well, because that was a pretty big gap, very big bar at the open, closed at the low, and then the very next bar took out the lows. So that was another shock pattern. Now we have 2 inside bars. The concept of the price void applies to everything we teach, which means for shorts, look to the left. There's insignificant resistance to the left.
Yeah, so Marcel asking me, is the last bar in the square, which is that bottoming tail bar, as a mini shock as well, indicating that it might go up after all? That's true. So, as we get deeper into the thought process, is what we call it, right? And, we already went over the wide range bar and then the topping tail bar. And now we haven't talked about this, but that little blue dot there communicates to us that buyers created some support. And on the retest right there, it formed a bottoming tail bar. So at what point in this decision-making process do we have enough events to say it's a trade?
Right.
Because every bar communicates something to you, but until you get the event, the actual event, which was right here on that bar, it gapped under the low of the bottoming tail bar. So if we were talking about the gap course and how to put together a decision for the gap course, we'd be talking about a gap below a bottoming tail bar in the context of what preceded it. Now, where Dan's pointing out where it was a recommendation to subscribers was, hey, all of this stuff happened. And at the time, Dan posted this, bearish 1, 2, 3 continuation breakdown with a price void. He didn't explain everything that we're talking about here, but in his mind's eye, he saw all of these things to say, this is a moment in time that this is a tradable strategy by saying what it is with all the explanation that you're getting today.
Awesome.
So then you kind of shortchange the subscribers.
Yeah, and so, you made a good point, and I always like doing that because people, Greg, we talk intelligently, hopefully, but at the end of the day, it's like, show me the money. Tell me how to make money. And so some of these charts you're going to see could be a 1 or 2 bar shock. And this one, took more time to develop. Let's continue. Voila, here's a 2 bar event. So Greg, this, show them this beautiful thing right here. I see the moving averages, the consolidation, the price void, the red bar ignored, on and on.
And it is, I don't know if I was finding stuff here. Anyway, I was going to type there. What makes this even more powerful, it's a range expansion bar. So you could say, hey, there's a red bar. Well, that's a red bar, and that's a red bar, that's a red bar, that's a red bar. But they're not big, giant red bars like that said it was going to go down because it was so big. And then it was completely negated on the next bar. So the concept of a range expansion bar in the context of, this pattern that was developing, again, we're taking an event, right? There's this little piece there, but without understanding what preceded it, trends, and these, little points that we're explaining to you in of itself wouldn't tell you to do anything. But with everything else that was going on here, the moving averages, it's like, hey, that's a setup to trade. Call it what you want. It's going to go up. And so I say that like, look, it's impossible to fail. We know anything can. But the beauty of it is, if it breaks below that, which is unlikely, it's just insanity, which we've seen some of, but that's just crazy insanity type trading. So when you get that big range expansion bar like that, without a doubt what's your entry and where your stop needs to be.
Yeah, BC, the entry's over the red bar's high, and then once that green bar closes, I would be adding the next day over the green bar's high.
Justin's asking, was it actionable? Go back to that chart, Dan. Was it actionable to have shorted the doji at the 20 MA third from gotcha?
I think it means
Here?
Here.
All right. Yeah, I think that's what he's talking about. So I don't like setups look, you could do anything you want, right? Of course, the thing is it a high probability setup? And for me, it's not, because first of all, you've got this low right here. It created support. It isn't a downtrend. What would make it a high probability setup? Adding an event.
A shock pattern.
Right. A green bar followed by a red bar back down. If that doji had a big tail on the top where it was rejected by breaking out above the highs, that would be actionable.
Right.
So range expansion bars and these shocks are something that we look for all the time and would love to have part of our setup.
Yeah. And that's the other takeaway from this also. Even if we're not trading a shock bar per se, we're looking at price behavior leading up to it, which gives us more information. And so we actually gave this to subscribers twice. We did this one and we just went into trail mode. But this one actually that we did more recently was we just bought a vanilla breakout, bullish price action. So Greg, this was another one of yours. I forget the symbol, but this was earnings. I do remember this. So we had it on our watch list for a sell setup with creating resistance at the 20-period moving average. I had canceled the trade when it broke out on earnings. And then we both put it back on our trade list when, and this is, Greg and I do this all the time. We look at a pattern and we just set an alarm.
Mm-hmm.
Say, what would it look like if XYZ happened, taking into account what we're sharing with you today? So tell them, Greg, I mean, at the high of this or whenever, it doesn't even matter. We would ask ourselves, could you imagine if this traded under the bar's low tomorrow? Well, set an alarm and we'll look at it then. And that's when we bought puts on this thing under that bar's low.
And, we always point out part of the thought process is that was a big green bar before it turned into a topping tail bar. So there was a whole bunch of buyers that thought this would keep going. And I'm not saying that they were wrong at the moment, because it could have went up here, but then it fell apart and it came all the way down and it broke out above those highs. So this part of the pattern right here, like this, those three bars right there, it tried to go down and it flips back up and it's a little breakout, but it is counter trend. For day traders, there's nothing wrong with a setup like this to be thinking that day trader, but at the end of the day, for a swing trader and seeing all of this and it coming into resistance, the 20 and 50, such as they are, that's got to go down.
Yeah.
That's a shot.
Absolutely. I was just looking at something here. As the market's falling. Just highlight one more thing here. I love trading options, or many of our subscribers do also. We buy options when we have a directional bias. We sell them just to profit from calling a short-term high or low. And then we profit through time decay. Now this one, we said buy puts because they were liquid. And because we get leverage and limited risk. And in one day, this is a closed trade, and we keep all our open and closed trades in the members area in a spreadsheet. We bought these puts, $1.60. We get the technical setup, management in between. So we made 59% return on this long put in one day. And then, this is the average out, 47%.
Justin said, so your setup was under the green bar, not under the next red bar, it was under the topping tail bar. Go back to it for a second, Dan. All right, the short is under this bar. That's your entry. Now you're saying wait for a retest. You might get a retest and you might not. And money management becomes, as always, important. So, and this gets into a whole conversation about multiple timeframes, which isn't this topic, but if you were utilizing intraday timeframes and you were, an intraday trader, you could wait for a retracement and look for a better entry point. However, as a swing trader, you have a larger stop, and your money management is such that it allows you to enter and not wait for a retrace, because the time frames out of alignment will come together. And that's the premise of swing trading. I don't have to know what every slower time frame is doing. Your stop loss will take care of that.
Right. And in the green room, where we're more active, then yeah, absolutely, we do that. All right, so this one, why do I have two charts here? All right, one of two. So this is a multiple bar setup, but everyone should agree that we're in a downtrend. Lower pivot highs, lower pivot lows, declining 20, declining 50, closing breakdown. Very next bar negates it. That's a shock pattern. Now, could we have worked an entry in here as swing traders? Yeah, but it was still, I say, just getting its sea legs back. It negated that, which is an awesome start. This star looked lower also. It made a new low. Gapped up, topping tail. Is that an event? No, because I'm at resistance. I got no pattern and no price for it. What about this one? Greg, what are you and I both thinking at the end of this day? It made a higher high, higher low, narrow range bar, but Greg and I are both thinking, what if this trades over the high tomorrow? Now I have a breakout of a multi-week bottoming pattern. This is the same chart afterwards, in which we gave to our subscribers. Another option trade because they were liquid over the high of this red bar. Buy these 120 in the money calls, and beautiful trade. This is not so much a shock per se, but you'll see that the combination of all these bars together created an awesome, what we say, it's a bullish turn at the 50. Remember on the slide of 9 bullish patterns, I said this is a master trader buy setup, a pullback, a retracement and reversal on support, and an uptrend. That's what this is, although it was a deeper retracement. So a deeper retracement, I prefer multiple bar turns. So this is just steady, 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 steady selling. Gap down, Greg used that term range expansion, remember? Gap down, bullish engulfing close. Could you buy over the high of this bar, stop under the low? Without a doubt.
So, what I want to explain is, I want to go back to, I think it was Justin's question about retracements. Something with an extended move like that, you might get this kind of a retracement would make sense. But what I would like to explain here is the kind of information I'm getting pretty close to start recording, Dan, getting closer for the intraday course. But this is the kind of pattern that I'm going to be explaining exactly what Justin is asking. If you're an intraday trader, when you see something like this and it's a red bar, right? We talk about the transition from red to green, whereas on an intraday time frame, this would be making a bottom, and you would have some kind of a buy setup in between these bars to trade this. And of course, on these days, it just progresses as day trades where, following the trend and utilizing daily time frames and how to put that all together is what intraday trading is all about. It's not just about 1 minute charts. That's foolishness.
All right. Shocks. Look at it. These three stars here are all different shocks. This is what we call professional igniting gap breakout. So that would be on our long list. And then Greg mentioned he has the advanced gap strategies course. He has a beautiful 7-step process. But this would be on my list. I'd put it in a 5-minute little thumbnail at the open saying, let me monitor the price action and I want to get on board this thing. Had a beautiful run. We use moving averages as just trend as speeding up the analysis. They tell us when things are consolidating, the relationship between them. They tell us a lot of information. We've had other MT lives on that. You can see here now I'm getting extended. You can see it, this thing went from 98 to 175. And then explain that shock to them.
Well, I circled that. What kind of bar is that we've been talking about? One right next to the star.
Right.
Not only did it gap up above these highs, and this, I'll tell you something, that pattern, you might say, oh, I'm not saying it isn't, it's somewhat extended, but this 3-day reversal to trade this as a gap trade, there's nothing wrong with that. Extended can become more extended and consolidated for 3 days, and that's a bottoming tail bar right there. So it dipped down and it came up. That looked like it was going higher. So, with all of that thinking of how this was trending, bottoming tail bar, 3 bars sideways, the green bar right there was a little gap down and reversal. I would have said that thing's going higher. And so it did. You see how it opened here, it gapped up and it went up, and for whatever reason, it fell apart. But can you see how that's a range expansion bar? It's gigantic compared to these. These were moving up and the ranges look, as I eyeball it, pretty close to the same. So now you've got this giant range expansion bar. That's like a giant shock. Very powerful.
Absolutely. And then, again, the concept of the price void, when you have momentum moves like this, there's insignificant support. And so it just drove it back down. Here's another concept of ours called relative weakness and retracement levels. So if you were to look at one smaller time frame, which in this case is an hourly, this would be a massive momentum move lower.
Yeah.
Suggesting, for at least for day traders, a move in and move back up for a retracement. But notice I have 5 bars here. From here to here, we just eyeball it. We don't use fibs, oscillators, any of that. It couldn't bounce. So I love animals, but I kind of analogize it to it's a wounded animal. It got wounded here. It was resting to see if he could heal, and he's still wounded. And now here's my new gap short setup.
Yeah. And that bar, it's a bottoming tail bar. I mean, it didn't close at the high, but all of these attempts to go lower, you can see these small bottoming tail bars. It could never trade above the highs. So intraday, while it was basing, I think if it could have cleared this high, it would have brought in some longs for sure. And if it did do that, just imagine if it did that, what we're talking about, and you had a range expansion bar that took out those highs and then closed down, that would have been short that puppy.
Right.
So shock patterns, along with what's happening, let's call it the bigger picture, what's happening in the chart, does that shock, is it aligned with your big picture bias, which was this? I say absolutely if that happened, but this, in this example, it gapped down under the base. So all of those attempts buying the dip, those bottoming tail bars, they failed. That demand should turn into supply and drive it lower. You can say, okay, the 50 MA is right there. Maybe it stops there, but I would think only for the moment before it went lower.
Absolutely.
It's not a big stop for a swing entry, John. The stop, if you short here on the gap down, your stop has got to be above the base. And so if you say to me, that's too big a stop for me, and I would say, why? And then you would say, because it's 3 points or 5 points. And I would say, okay, if you normally do 500 shares, can you do 50 shares and calculate the loss to be exactly the same? And you'd be like, oh yeah. And you'd be in. And you find, we talk about continuation patterns on another MT Live to adding to that position. Or you could take the MTS course.
And yeah, and it's not today's session, but I like tightening stops as soon as reasonably practical as the chart suggests. So depending on how this bar closed, if I have confidence that, okay, the trade's working, I don't think it's going to get back above today's high now, then I move it from that bar's high to that bar's high. Here's shock pattern. I got a multi-week consolidation on the daily chart. It's a gap breakout. It's a breakout on the weekly. Notice how there's pretty darn small bottoming tail. And so that means strength. It couldn't retrace from profit taking or shorts or whatever. And that's a sign of strength. That's an igniting gap breakout shock.
Pro gap.
Now, this one I say is more of a shock. Why? Well, this one's just bullish price action. And you see here, I'm saying high or low. It's dead money in a trading range. But this was less of a shock than this one. Why? Well, it's obvious. Look at this ugly red bar, closing breakdown under a month's consolidation. That would be a short under the day's low, but it didn't trigger. Then it gapped up over the high of this. Again, notice no bottoming tail. So buyers stepped right up and drove it higher. So remember, we've been talking about on every slide where the action event is. This action event occurred in one bar, not multiple. That's a beautiful gap breakout with the shock pattern, which is one of the criteria in Greg's gap course. Is there a shock element to it? Gave this in our ETF investment trader, which only trades ETFs. So this was a shock called a breakout failure, gapping under this green bar that was bullish consolidation. Does that mean I short right there? Maybe, maybe not. But it's the start of, uh-oh, something has changed. Now, so we actually shorted it on this bar, sell setup here. And you can see we just trailed here and made a beautiful gain on this one, 30% return. This, we give you as many charts as we can in the allotted time, and we're obviously, as always, going to save time to look at real charts. And we're giving you different flavors. Okay, what is this flavor? What is this shock? Well, it's in a downtrend, right? It got killed here. I got declining 20, declining 50, and I have a nasty gap down under the prior low. What do I do with that?
You cover your short.
Yeah, exactly. I'd be covering the short, or at least half, and then tightening the stop without a doubt. But this is just an interesting pattern that we developed and gave it this name. We call it a bear gap. So that's a bearish gap that bullies. What is, bully in elementary school, right? So it bullied and completely negated the bearish gap down within 1 hour. Does that mean I buy it, Dan? No. Go back to the first slide. Do I have a pattern, price void, multiple time frames, etc.? The fact that this had a closing breakout, see the top of the real body? That's the closing price, right, of a candlestick. So it not only filled the gap, it exceeded it. I have a price void. So that is a beautiful brand new setup as a shock pattern called the bear gap that bullies.
No brainer put spread if it had premium.
Absolutely. So this was, we love day trading in the green trading room. We don't send day trade ideas to our subscribers because those are swing letters and you need more attention. But we love trading the liquid ETFs. This is a spiders. This was an economic number, and these vertical dotted lines are pre-market, by the way. So I can tell here on a 15-minute chart that this was a 10 o'clock number. Igniting breakdown. What does that igniting bar make you think? So we're always thinking, what's the bias being communicated? And then we've been showing you how to turn a bias into a tradable event if it sets up. So I'm thinking bearish, but then it had a greater than 100% retracement. I typed some notes here for you. Retracement concepts are very valuable. So I have a greater than 100% retracement. I have ugly red. Look, that's the biggest ugly red bar, at least on this chart, negated. I have a price void. And now I have the master trader buy setup, which is a retracement and reversal on support and uptrend. No brainer day trade entry right there.
I'm going to show them one from yesterday right now. That was in the green room yesterday.
Oh, awesome. Yeah, I was wondering how you were going to show them, but there you go.
Red bar ignored. It was was at resistance. There was a little topping tail, the red bar. And it's hard to see on it, but it was a little bit of a range expansion bar. And it was like go up. And I'll show you one from today.
All right, awesome.
On the other side.
All right, so perfect lead into this. We have a no-brainer $7 trial. Spend a week with us and watch us implement all this great information that we share with you each week in real time. It's not talking about a chart of what we did yesterday or this morning. We do it together. So yeah, just a couple more here. This is what we call a breakout failure, similar to the other one I just showed you. So where would I enter this particular chart? For me, it wouldn't be until this gap down right here where my little pointer is, because then I have three lower high bars, and it's gapping under the low of 4 bars. So that would have been my entry right there. Stop over the prior bar's high. Here on the bottom, nasty downtrend, 180 reversal. Would I buy right here? The answer is no. Yes, I got a 180, but it's a 180 and a downtrend with no price void. And now you have my attention when it gaps up, because I have this price void over here. This is a shock from a climactic sell setup. This is an older chart back in the days when the cannabis stocks just went insane. When I see a picture like this, I watch it every single day, because I should have put a picture of a rocket over here running out of fuel. Unless this stock gets bought out for some reason, it will retrace. I don't know when or what the picture is going to look like, but this thing rallied from $1 to 14 in 3 weeks. So I sometimes, in my watch list, I'm watching them for 3 weeks, and the green room folks know that. I'll tell them, I'm watching you every single day. You are not going to get away. We will get a setup when we recognize it, and this gap was the setup.
You messed me up there, Dan.
Oh,
Hey, great little writing there. Let's type in, that's a range expansion bar. So range expansion bars can ignite moves. They can ignite moves, and they can signal that you're close to the end of a move. So different ways of using range expansion bars.
yeah, absolutely. Absolutely. Yeah, BC, we'll take a look at some of those. But yeah, there's many with this regional bank fiasco recently. There's many similar patterns that are climactic buy setups, and we want to find the ones with the most bullish turn. So yeah, let's definitely look at that here in a moment or two. And the only reason I'm showing you this one, look, a bearish gap, that's a nasty gap. You know, this thing went up a lot, but there's no pattern. What do you want me to do with this thing? See, so
That's a good example of gapping down to support. So you can't do anything, and it's an excessive gap.
right. So that's the illustration there. What I want to ask you here is, this was the the spiders when you know, a while back here, but let's just focus. This was a breakout failure. Greg, I don't know if you remember this.
Yes.
I do. In the advisory letter, you were raising all the storm warnings with market internals, with intermarket analysis. You're like, danger, danger, danger on the long side. And that gap down was a tradable event now for the shorts because of the big price void and breakout failure. But let's jump right to these 3 bars right here. And I typed here, what are your thoughts? There's, you know, no right answer, and you can't talk back to me, so just answer it in your head. And then look at my second question here. What would be a good shock setup? It's like, to me, it's down too much to short. It's down from here to here, It's at the 200. It's in an area where it reversed before. So where do you think I'd be setting an alarm? The answer is I would have gone to a smaller time frame just because I always set my alarms early. But this would be a 180 shock pattern if it took out the high of this for a swing trade, you know, somewhere in here, 50% bounce. And go look at it. The date here is 18, so it was a while ago. That is exactly what it did. And part of the reason that I had that bias is because our market internals were cooked to the downside. So we are looking for bullish price action to go long.
Well, 1 sec, Dan. What I was pointing out there is part of our conversation today has gone into range expansion bars. And when you see range expansion bars followed by range expansion bars and they're overlapping, the best thing to do is nothing, because it's just too erratic. And you can go down a smaller time frame. That's appropriate. So one of our concepts is you got two choices actually. From a swing trading perspective, when you see a picture like this, go to a higher time frame and condense it. If you want to trade more actively, you have to go down to a lower time frame because it's just so erratic and whippy. This could be a green bar up tomorrow. So,
well, and these banks and Climos are exactly that.
Yeah.
All right, we're almost done here.
Let me just answer BC, because this comes up and it kind of baffles me. Maybe because I guess we're not explaining it as clearly, but I'm going to give you a clear definition. BC says price void is the most difficult to grasp. What determines the significance of resistance? And the whole point, BC, is that there is no resistance.
Well, I say insignificant. There's always resistance, but yeah.
Well, no, I mean, look, it could be so far away, or it could be 50 all new all-time highs. But the idea of a void is that there has been, right, a price and time correction. So there could have been some squiggly area over here. So between here and here, there's nothing. That is a void.
Right.
Let's go.
All right, almost done here. This is just how we use bar by bar analysis. We actually were in this trade. I mean, we take stops, of course. Every trade doesn't work. We bought over the high of this bar as a breakout. At the end of the day, we said, danger, danger, Will Robinson. I don't like the way this closed. The next green bar, I said, okay, we're going into, what do you call it, Craig?
Intelligent hope mode.
Intelligent hope mode here. Now I'm out of this thing. It traded under the green bar, under this support. So that's, you know, it was a breakout failure. It shouldn't have done that.
Little shock there at the top.
Yeah, beautiful day trading again. And we do buy options for day trading, particularly on the spiders, Qs, some of the liquid fangs. You know, we have a list of 20 or so that are our go-tos for directionals. Beautiful 180 reversal here on the spiders here in the afternoon. This chart down here is charting the price of these 261 calls that we bought. Just incredible late day breakout shock pattern of a 180 reversal.
I was going to grab it, but I can show it now. There's a similar pattern. Similar, right? Different, but kind of the same. The spiders this morning, when they went up, there was that range expansion red bar ignored. But look at it.
Yeah. All right, so we're done now, folks. If you just want our advisory letters with stock and option picks, and you like to trade and be active and go to the golf course or work, we have advisory letters. But if you want to learn our technical approach, so as the saying goes, you learn how to fish yourself. Go to mastertrader.com/education. Greg does all the equity seminars, and I do the option ones, which use our technical based approach as a starting point. No bias. Don't even talk to me about an option trade, because I can't. I don't know what to put on. Long, short. What's your bias? And just check it out. And we have, whether you're new to trading, we have mini courses, and feel free to email us with any questions. So as always, we're going to look at the markets right now, answer any questions. And
this is what I was talking about right here. That was what Dan was showing on that slide, was a similar type of reversal. It was consolidating, it was a red bar. It's like, okay, that's going to go down. And you can see the range expansion bar. Oh, that's good. That's going to go up. All right. Why it stopped there, I don't know, it's another conversation, but just wanted to point that out. So let's look at some other charts. Anything you guys want to look at? Someone asking me, had a wide range bar 12 failure breakout at, I guess, 12 o'clock. I can't show you ES here because this platform doesn't have it, and the other platform is open on my desktop. So you're saying on the 15-minute chart, 15-minute chart, wide range bar 12 o'clock. I guess, well, not 12, I'm not sure. Oh, I guess you mean this. I'm not sure. Wide range bar there. Breakout failure. It's not really, that's not a breakout failure. Right? We don't call that a breakout. It's just a wide range bar going up. Right? A breakout failure would be something that's relatively tight. It breaks out and comes right back in again.
like that slide, danger.
This is a deep retracement. So one of our trading concepts, it's not a strategy. That's what we call them, thought building lessons. Wide range bars are igniting bars. Prices aren't supposed to retrace back to the bottom of the bar. That's a problem. Because if demand was that strong, it wouldn't be here. And it did. So that's a sign of weakness. Now you can say, well, this one did and it went up. Nothing's perfect, but still coming back down. Well, it is different in that, look, this one was going up for a while. It was a range expansion bar. So it pulled back. And so this one was correcting in a range expansion bar. This one is a lot more bearish of a failure of a wide range bar than this one is. This one isn't that unusual. All right. Well,
Somebody asked about the banks. If you want to look at XLF, JP Morgan, whatever, the insurance stocks, IA, whatever it is.
Yeah.
AIG,
so
we traded.
I'll go through them all. But this isn't a range expansion bar, but look how it cleared the high here. And then it came right back down. So here's your 1, 2, 3 kind of a pattern right here. And the bullish turns that we looked at on the slides, if you flip them upside down, and one of them says, call it what you want, it's going to go up. Well, here, call it what you want, it's going to go down because it retraced the whole thing. And that's your little stall bar. And then it collapsed. So while there was support here, it tried to stall, but this breaking here entered into a void. Now, ultimately, I think unless it could start to retrace all the way back up, I think it's got to come down here where there should be natural buyers down there. And rarely, if ever, when you see a momentum move like this, they rarely go right back up again until it starts to lose its downward momentum. It is kind of a climactic buy setup.
Well, look what I typed. I said, yeah, I said it's sloppy, but we want fluid bars with a potent turn. This is a mess that's
Yeah.
trying to possibly bottom.
Yeah. It should have just kept flowing to the downside. And it's news related. It's not like it went down. Maybe the market was dropping, this is just too much uncertainty in news, so it's better to stay away from it.
Mhm.
Um,
And last we get a something bar.
yeah. Lori, this is not, we don't use this for trading. We use it for scanning. It's a great scanning platform. You can trade from it, but we don't. We use it for scanning. It's great for, like I can click this and it loads the charts, the stocks within that sector. You can set up lots of different criteria of what to look for. So we have a whole page of scans here. And these tabs are a scan. So when you join Master Trader, if you use this platform, we give this to you. Self-serving reasons, because if we can teach you what to look for and then scan for it, you can tell Dan and I, and we can make money off of your ideas.
Love it.
So is it trending up? Is it trending down? Bearish wide range bars, bullish ones, 1, 2, 3s. If it forms, yeah, look at that, Dan. Look at that little bottom there, a wide range bar, an inside bar. That's a bullish 1, 2, 3.
Love it. Love it.
So it looks for different things, pullbacks to moving averages, bottoming tail bars. That's a nice little bottom. There's lots of nice little bottoms here. Here's a bottoming tail bar. Yep. Procter and Gamble. That's on the list. Yes, this has a void. Right? It collapsed. And this is what we talk about, slowing momentum, where they make lower lows, but the lows are closer together and it's bottoming. This one poked down and back up again. And this is a nice little continuation pattern right there. Bottoming tail bar, 3 bars consolidating after the gap up. And it's got a void. Yeah, there's resistance up here, but so we, getting not to get too deep into advanced concepts, but this resistance does become less significant because of the time spent going down and sideways. That doesn't mean it won't stop there. In addition, you've got a whole number of 150. That would be a stopping point, and that's where it initially started its breakdown from. But hey, should be, if this gets going, should be a 5-point opportunity as a target.
Sure.
So looks good, right? Tesla pattern.
Yesterday was the entry on Tesla, BC.
See, yeah, so bottoming, this is closer to the resistance. You see the difference between this and PG? I mean, this started the move down and it bottomed there at the 50 MA. And it could keep going up. If the market goes up, it probably does, but I think you should see the difference between this and the extension of this and the longer period of time building a base.
Yeah.
So you're kind of comparing apples and oranges. Procter and Gamble, a consumer staple, versus Tesla, which is consumer discretionary.
Well, Greg, just look at GIS also, same sector as PG. This would be a good one for what you're illustrating, plus topping tail ignored if it triggers tomorrow.
Yeah. So this one had the similar correction to PG. It gapped up. I don't know why, maybe earnings. And rather than basing down here as PG did, it gapped up. A more powerful display of strong demand. and it came down into where it started and formed this pivot and retested it. Tail being ignored, maybe that would have went down. Red bars being ignored. And so as Dan said, if it can clear that high, it could move up. And intermarket analysis kind of thinking, I think if General Mills and Procter and Gamble are going up, it's probably a bad sign for the markets.
Right.
You know, because these are things that you need. So if you're defensive, you're going to want to buy stocks that people need, because you're still going to buy various things that you need around the house that you use every day, laundry detergent and soap and so on and so forth. But are you going to go buy $100,000 Tesla? Probably not, until things clear up again. So consumer discretionary products are more likely to do poorly in a bearish market and in a bearish economy, when consumer staples tend to do much better. So I hope you guys enjoyed this session. I did. I love talking about shock patterns and putting it all together, and we'll be back next week. We'll see you then. And email us if you have questions. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.